Welcome again, my dear students. In this video, we will talk about measures of national income by income method. In last video, I was discussed about national income, measures of national income by net product method. Okay. Now, in this video, we will talk about in detail income method. Okay. National income is calculated in the adding of all the income generated in the course of producing national product. So, by using income method, national income is calculated by adding up all the incomes generated in the course of producing national product. Okay, this method involves the following four steps. Step first, classification of enterprises. Second, classification of income categories. And third one is estimation of domestic factor income. And last one is estimation of net factor income from abroad, NFIA. Let's understand one by one. First one is classification of enterprises. Okay. So, in this first stage, production enterprises which employ factor services are identified. These enterprises are classified into various industrial groups such as agricultural, mining, forestry, manufacturing, electricity, trade, transport, and communication, banking, insurance, government, professional, and personal services. So, in previous video already told you that classification of enterprises basically three types, three categories. First one, primary, belongs to agricultural. Secondary belongs to manufacturing, and last one is services, that is belong to providing services like banking, communication, etc. Okay. Now, second step is classification of income categories. So traditionally, factor of production are classified into four categories: land, labor, capital, and enterprise. Accordingly, factor payment are for land, they give rent; for labor, pay wages; for capital, pay interest; and profit for enterprise. But in some production activities, however, labor and capital are provided by the same persons. Accordingly, factor income is classified into the following three broad categories. First one is labor income or compensation of employees. Second, capital or property income or operating surplus. And last one is mixed income. Okay. Now, third step is estimation of domestic factor income. In the third stage, the domestic factor income is estimated. Income paid out by each producer enterprise in the estimation by adding together three kinds of income, namely compensation of employees, operating surplus, and mixed income. So whatever income producers have paid, whether it is from labor to capital or mixed in the domestic territory, all of we added together is called domestic factor income. Now, step 4, that is estimation of net factor income from abroad. In the last stage, net factor income earned from abroad is adding to the domestic production, domestic factor income to arrive at national income. So after estimating the net income from domestic territory, net factor income added to the domestic income, we get national income. But national net factor income from abroad, NFIA, already explained in last videos, that is factor income earned by our resident from the rest of the world minus factor income earned by non-resident in our domestic territory. Okay, so in brief, national income is equal to compensation of employees plus capital incomes or operating surplus plus mixed income plus NFIA, net factor income from abroad. Okay,